Good afternoon and welcome back to our final installment of How May I Help You here at Compass Consulting and Financial. Imagine life without credit. It would drastically change how we spend money. Whether you're securing a mortgage for a new home, using a student loan to pay for college, or simply putting groceries on your credit card, we need credit. Building a strong credit history and maintaining a high credit score can have a major impact on your quality of life and future financial well-being. But what is credit? Credit is your ability to borrow money on the promise that you'll pay it back later. It is applied in many different aspects of money and finance, such as paying with a credit card, buying a car, or accepting a loan. What is a credit score? Your credit score is what lenders use to decide if you should be allowed to borrow money and at what price. So it's important to understand how this crucial figure works and what you can do to improve it. Putting a little effort now to increase your credit score, even a few points, can make thousands of dollars of difference in interest payments down the road. If you've never had to borrow money, your credit score may not be something that you've spent much time considering until now. Once you get to stage in life where you need to open a credit card, get a mortgage, or take out a loan, however, your credit score will suddenly become absolutely crucial, and being unprepared can be missing out on paying more. Regardless of where you're at in life, your credit score should be a priority. Now, credit score is reported by three private companies called National Credit Reporting Agencies, or for short, credit bureaus. These are Equifax, Experian, and TransUnion. While the algorithms used to calculate scores at these agencies are very similar to one another, there are slight differences in what they weigh and what information they collect. If you have a solid credit score at one agency, however, you'll likely have a good credit score at the others. Your credit score is a mix of many factors that represent how good or bad of a borrower you are. Improving your credit score is hard, but hurting it is easy. The following mistakes often lead to a declining credit score: maxing out your credit cards, putting all your eggs in one basket. For instance, credit mixed accounts for 10% of your credit score. So keeping all your debt and loans or credit cards is not ideal. If you must have debt, diversify: credit cards, personal loans, auto leases. Renting a car without a credit card. When you rent a car without a credit card, the rental company is likely to check your credit score. This is another hard inquiry that hurts your score. Leaving bills unpaid. Now, your credit score rises with consistent, timely repayments of borrowed money. So pay all your bills on time, keep your balances on your credit cards low, secure a steady job because lenders do ask for employment information, pay off your debt, and check your credit report for accuracy. You can do this at annualcreditreporting.com for free. Here's some tips to help build your credit. Open a bank account. Lenders may want to see evidence of consistent savings. If you're looking at a credit card, look at one with no annual fee and then leave it open. This helps establish how long you've been creditworthy. Consider charging one recurring bill, such as your phone bill or electric bill, to this card every month to maintain a good payment history without accruing a huge balance. Only apply for new credit cards when you need them. Having one or two fee-free cards in your wallet helps your credit mix and increases your total available credit, which is great, but make sure you keep your balances on your credit cards low. If you have a lot of credit available to you, but you don't use it, your credit utilization ratio stays low, which is fantastic for your credit score. If you open two cards and max them out, however, your score will seriously suffer. Always pay your bills on time. And if you need to apply for a loan, shop around for competitive rates. Borrow as little as possible and always make your payments on time. Consider asking for a cosigner with an established credit history to get lower rates on large loans. Secure a steady job because, like I said, lenders may ask for employment information, and be vigilant about payments and set yourself reminders to get them in on time. Use online banking tools to automate your payments so that all your bills are paid as soon as your paycheck clears each month. Careless mistakes can affect your score for a long time. Well, we hope you've enjoyed this year's series of How May I Help You, and we'll see you guys all again next year. But stay tuned for timely information provided here at Compass Consulting and Financial.